Hello, welcome back to this week's market update. Today is Tuesday, May 28th, 2024. Just coming off of the holiday weekend, so we will jump right into our market update. Last week was quieter with all eyes on NVIDIA's earnings as well as housing data and durable goods orders. By close on Friday, May 24th, the Nasdaq Composite had risen by 1.35%, while the S&P 500 was just about flat, the Dow down slightly, and the Barclays Aggregate Bond Index down 2.3% over the week. Heading into our economic news of the week, we got April's existing home sales data much below expectations at 4.14 million existing homes sold, and this was a drop of 1.9% from both a month ago as well as from a year ago, which is not a great sign as we're heading into the home buying, the moving season, as a lot of people tend to move in the spring and early summer and the volumes are dropping here. And a lot of that comes down to just the impact of higher rates keeping people where they are. And then we look at inventory, that's up from 3 months worth of inventory a year ago to 3.5 months in April of this year. And last but not least, we saw the median sales price increase 5.7% from a year ago to 407,600. So overall, we're seeing the housing market really continue to slow down off of last year's higher volumes as the impact of higher rates slow down volumes, although they have not really slowed down the price appreciation. 5.7% is a pretty strong year of growth for the median sales price of an existing home. So overall, still strong in the existing home sales market, just moving a lot slower than we were a year ago as higher interest rates keep people where they are. Alongside April's existing home sales, we also got new home sales showing even more so slower volumes being sold in April. 634,000 new homes were sold in the month, which was down 4.7% from March and 7.7% from a year ago. We also saw the median sales price come in at 433,500, which was down 1.4% from March, but up 3.9% compared to a year ago. And a lot of this comes down to just how new home builders are facing quite a bit of headwinds from higher interest rates, which are dampening demand, especially in those kind of higher priced new builds in the 500, 600, 700,000 range across the US. And that is leading to lower volumes in the amount of new homes sold, as well as just lower availability overall, less new homes being built. So really slow real estate market compared to where we were a year or 2 years ago. But overall, we are still seeing stability and even growth in the median sales prices of both new and existing homes. We also got durable goods orders last week for the month of April, showing a monthly increase of 0.7%. So sounds pretty strong on the onset, especially compared to the 1.2% drop that was expected. So much higher than that. However, when you exclude the impact of transportation orders, it only increased about 0.4%, so just a little bit more than half of this nominal number here. And then when you exclude the impact of defense spending, it actually was flat month over month. So very much skewed by just a few categories. However, it is good that it was still a stable month of durable goods orders compared to the heavy drop that was expected. Last week, the spot gold price reached a new all-time high on Monday, May 20th, driven by a combination of favorable factors. We have persistent inflation, as well as rising geopolitical trends, as well as just the inherent kind of safe considered value due to gold's limited supply and long history of appreciation. Here you can see on the chart where we are here on a nominal basis. So this is not inflation adjusted. When you adjust the dollar per ounce here to the actual CPI index, it actually is not an all-time high. However, when you look at just the pure nominal dollars, this is an all-time high, as you can see, as we date back to 1970 here on this chart. So lots of demand for gold, silver, Bitcoin. We've also seen demand for Ethereum increase as the SEC approved the first spot Ethereum ETFs last week, and a lot of cash on the sidelines as well, earning 5% risk-free yields in treasuries, money markets, high yield savings accounts. So it'll be really interesting to see how these risk on assets like gold continue to perform over the coming year as they have been performing quite well in recent history. One final update from last week, NVIDIA reported their first quarter earnings after the market closed on Wednesday last week, surpassing estimates and raising their forward guidance as well. The company's sales were up 262% from a year ago, and their earnings were up 461% from a year ago. So just really stellar earnings and revenue growth in the first quarter for NVIDIA. They also revealed a 10-for-1 stock split that will take place in June, aimed at making the shares more accessible from the $1,000 price point that the shares are currently trading about for, and that will break it down to about $100 a share. On top of that, they also increased their quarterly dividend from 4 cents a share to 10 cents a share as well. So that's an increase of 150% in their dividend. And then you can see just kind of the divergence in between the S&P 500 is this black line down here. It's up just a little bit more than 10% on the year compared to Nvidia, which is up more than 100% for the year. So, and Nvidia is the third largest stock in the S&P 500, which has driven a lot of these gains in the broader index. So, overall, really great quarter from Nvidia. Couldn't have been better, really, at all. And we will continue to watch for these important earnings and how they affect the market. Thank you so much for tuning into our market update, and we look forward to providing another update next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.